Good morning, traders, and welcome back to today's daily analysis. Starting with the US dollar index rose to a nearly 2 month high of 203.18 last week, but faced a resistance between 103 and 103.20. The Federal Reserve officials expressed the support for a gradual approach to interest rate cuts, and the recent minutes reveal internal disagreements on cutting the interest rates by 50 basis points. The market expectations for rate cut before year end have cooled, with less than 50 basis points anticipated. The higher inflation data could reignite discussions of American exceptionalism and bolster the dollar. Despite the rising jobless claims and 0.3% increase in core consumption prices in September, the dollar did not benefit, reflecting a complex market dynamic ahead of the US election. The index is expected to strengthen towards 103.50 in the short term. The key resistance levels are at 103, 103.18, with the psychological barrier at 103, and the support levels are at 102.62 and 102, with a potential drop to 101.68 if the bearish pressure continues. And then for WTI, crude oil prices stabilized around $75 last week after recovering from the earlier lows. The tensions rose as the Israel indicated potential retaliation against Iran, while President Biden urged against attacks on Iranian oil facilities. The market remains cautious about disruptions to oil supplies. China's stimulus measures are expected to boost the fuel demand, but the stronger US inflation data has raised doubts about the extent of the Federal Reserve rate cuts interest, limiting the price gains. The key support levels are WTI at 73.53 and 73.97. If these holds, resistance levels to watch are 76.60, 77.17, and 77.93. A close below 73.51 could indicate weaknesses, with 72.07 and 71.46 as a potential support before testing the $70. The final support is at $66.18. And then lastly, for the gold prices rose above $2,650 on Friday, buoyed by the decline in the Michigan Consumer Confidence Index and the disappointing US employment data, which bolstered expectations from the Fed Reserve interest rate cuts in November. This environment makes gold more attractive as a non interest bearing asset. The yellow metal rebounded from just above 2,600 after an unexpected spike in US the jobless claims and the received support from dovish Fed comments, geopolitical tensions, and particularly Israel military actions in Lebanon and potential retaliation against Iran also drew safe haven investments. Technically, the goal is stabilizing above 2,625 to 2,630, with resistance at 2,659.60, last week's high, 2,672 to 2,673. If the goal surpasses 2,700, it may continue its multi-month uptrend, and the support levels are at 2,625 and 2,600, with further support at 2,583.80 and the 40-day EMA around $2,572. And that is all for today's daily analysis. Thank you for watching and have a nice day.